if anyone has any kind of questions or any confusions or any feedback, if anybody wants to give.
Yeah, I think people who want to ask questions or make a comment, they can raise their hands, and then so Sarvanan wants to ask a question. Shabnam, are you there?
Sir, it's unmuted. Are you able to hear me?
Yes, Sarvanan, we can hear you. Please ask your question.
Sir, you told that 10% is the taxation on capital long LTCG. That is, if I am getting profit, I have to pay 10%. Suppose, as you told, due to the crisis, that is like COVID, something is happening. In that case, if there is a fall in the fund investment, in that situation, how the taxation will get calculated?
And are you talking about the losses which we are making?
Yeah, losses. The mutual fund either may go. It is everything is subject to the risk only. So if, suppose if it goes under loss means, in that situation, the tax, how the taxation will get calculated?
I would recommend you to get in touch with CA. However, I'll give you what my understanding is in this thing. What I understand is whenever you make any capital gain, you are supposed to declare that capital gain, okay, and pay tax accordingly. If the reverse happens, what I understand is you can go for these loss, you can claim these losses for over next 8 years. You will have to get your books audited. What I understand is you will have to get your books audited, which is basically you will have to go to a CA, you will have to tell them, okay, you will have to certify that I have made certain losses. I am selling my mutual funds and I want to book these losses. Okay. Now, when would you do this? Okay. Please understand, why would you do this? If I only have one mutual fund in which I'm making a loss and I don't have any income tax to pay, there is no point in making there is no point in going for such lengthy procedure, that going to a CA, getting your books audited, getting your tax, and where you are not supposed to pay anything. You can simply book your losses. And if those losses are minuscule, like if it is only like 2,000-3,000 rupees, then it doesn't make sense to take all these efforts. Rather, you can simply say, I have sold my assets. I don't have any profits on this. I'm not paying any income tax. I'm under zero income tax for this particular year. And you can file zero income ka ITR. That is the simplest way out.
Yes, sir. And the taxes should be paid on selling the asset only, or on booking? That is
on selling asset. I'll tell you, there is a difference. In mutual funds, it's ideally on selling assets. In mutual funds or any other real estate, if you say real estate, mutual funds, equities, these are on selling of asset. Okay. If you are getting any dividend, if the realization has happened, then if it is more than 1 lakh, then you have to pay taxes. In case of FDs or savings account, you will have to take out the accrued interest. Basically, if you go to any bank and tell them that I need the income tax certificate, they will provide you with a certificate stating that for this particular year, this is the interest rate which you had accrued. You may not have been paid because it may be a cumulative FD. You may not have been paid. For example, 1 lakh ka FD hai. For that 1 lakh FD, I'd say 10% of interest rate. I have kept it in bank for 3 years. I'm supposed to get, say, 10,000 every year. On that 10,000, there might be, say, 2,000 rupees, which is taxable. However, as the FD is cumulative FD, you may not have received that interest into your account, but you will have to declare it in your income tax return that for this particular year, I have booked an FD against which I have been accrued an interest. What accrued means is I have been guaranteed by bank that I will be paid this particular interest by the end of the tenure. And what I am doing is I am paying you interest in advance. That your CA, or you can do it. You basically, what you will have to do is you will have to declare the interest income basis the IT certificate which is given by the bank. But you will have to make sure that all these interest incomes which you are earning from banks, savings account, and the FDs have to be mentioned in your ITRs. So the people forget that these are supposed to be declared.
But you are telling, sir, in case of LTCG, STCG and all, while selling, we are that is we have to file that is tax will be get collected. But in the FD, if I am making 3 years, 4 years, 5 years, at the end only
every year you would get IT certificate from them. You should go to the bank if you are earning any interest. You should go to the bank and ask them for IT certificate. And also I would suggest you one thing. There are some Form 15 and Form 15G and Form 15H, I think, which you should go to bank and fill up in case if you feel that for this particular year, my income is not going to be taxable. Say my income is only going to be 3 lakh. I don't have any salary. I don't receive any rent or anything. I just have the savings bank interest, and which is less than the tax slabs of the Indian government declared tax slabs. Exactly. So you should go to bank. You should ask them for Form 15. I forget the name of the form. It's either 15G or 15H. But you should go and tell them.
15H for pensioners.
Correct. So you should go and ask them, okay, give me this form. I want to submit this form. What will happen when you submit this form is bank won't deduct TDS on your interest income. Otherwise, your FDs would be taxed at 10% flat. And the interest, if your interests are getting submitted to your bank, you would be surprised to see 10% deduction being calculated and submitted to the government. There is no harm in submitting it back to the government. The only thing is you will have to file it in return that my income was less than the ITR and the tax, which the TDS which bank has deducted, government should return back to me, which will take another 6 or 8 months.
Yes, sir. Sir, can you please throw light on the NPS? Sir, you told NPS, you have given a short introduction on NPS. That is, we don't know anything about the NPS. How to start an NPS, and is it mandatorily to put that is monthly? Some, for example, I am telling 5,000 per month. I have to put for every 12 months. That is, you told it is we have to put maintain for up to the age of 60. If you are putting 5,000 means I want, now I am 45 means another 15 years monthly I have to put 5,000. Or if there is any there is a rise in salary or low in salary, I can either reduce or increase my NPS amount. Can you please throw like
what I understand is to keep the NPS active, you will have to keep on investing every year a certain amount. I'm not exactly sure how much that's a minimum amount is, but it's very minuscule. It is basically an annual amount which you are supposed to invest into it. I would suggest that if you have already invested into NPS, okay, it's basically all the government banks like SBI and all will have the NPS section where you can go and invest into it. The tier 1 section. So basically NPS, the National Pension Scheme, has 2 different types of investment. One, where you can go and open your account for tier 1 investment. And otherwise, you can go for tier 2.
What is the basic difference in tier 1 and tier 2, sir?
Tier 1 and tier 2 doesn't have much differences. The only difference, the major difference I would say is tier 1 gives you tax benefit. Tier 2 does not give you any tax benefit. So if you want to say, okay, I want a 1,50,000 tax benefit, or I make investments of 1,50,000, I want additional 50,000 benefit, then you should go for tier 1. Okay. If you say, okay, I don't want any tier 1 benefits, I don't want a 60 years lock, 30 years, 40 years lock-in. I want to be able to withdraw this amount whenever I want. Only thing which I want is the benefits of government investing in equity and debt as per their understanding in these sections. What you can do is go for tier 2. Tier 2 does not have any kind of lock-ins or anything. You just go invest every month. And at a certain point of time, when you feel that you need that money taken out completely, you can withdraw your accounts. If you go for tier 1, tier 1 has a mandatory lock-in till the age of 60. Okay. you can obviously take out the money for critical illness, but for that purpose as well, you will have to get the certifications and everything in place. You will have to get your documentation right. Then only you would be able to withdraw. Otherwise, what they say is 25% of your total balance can be taken out after completion of 3 years. Okay, but if a personal opinion would be, if you have started an investment and you are in no need of an withdrawal, you should let that amount compound. If you break any of the investment, if you see that you need certain amount withdraw, or you see that there is a certain need which is going to come up in 3 years, say child's education expense or a hospitalization expense, which you foresee already, that I want to do this particular thing in next 3 or 4 years, and I want X amount of money in 3-4 years, I would recommend you to go for FD or debt mutual funds, which would give you 6 to 8% safe returns. Okay. If you want to go for a longer period where you don't see any use of that particular X surplus money, then you should keep it invested. Because why I'm saying this, why I'm emphasizing on letting it rest in mutual funds is because many of the people, what they say is, we don't see returns. मैंने 2 साल के लिए पैसे डाले, I have kept my money say in the equity or the mutual funds or a certain instrument for 1 or 2 years. Within 1 year, everybody starts saying that I don't see return, I don't see return. I want 12% return. 12% returns are not there. But if you track the thing I mentioned earlier is that if you see long-term return rate of the Nifty 50 is 12%. But if you look at last couple of years, which is after 21, mid of 21, if you see, it would be hardly 6 or 8%. This is the reason why we say let the amount be compounded and keep the investments in place. Obviously, you will have to.
To be frank,
yeah, one sec. I think there are other people also want to ask questions.
Yeah,
so yeah,
Okay,
so maybe we can. Yep.
Yeah.
Okay.
Yeah, Ketan
We have
sir,
Ketan who wants to ask.
is this
Just
safe
give us a
to
moment.
invest in gold? And gold, will it give me, will it beat the inflation if I invest in the gold every year? And what is the limit that when I sell, it will become taxable, the gold accumulated?
Gold, will it beat inflation or not is a tricky question, to be honest. Because there are basically two aspects to this. One is physical gold, and second is the e-gold, which is basically SGB, the sovereign gold bond, which government has introduced, the RBI has introduced. Almost like every 4 or 6 months, RBI introduces a new series of these bonds, which basically tracks the price movement of gold. Now, if we talk about taxability, if you are purchasing physical gold, okay,
Yes, sir.
I would urge you to buy bullions or biscuits, not the jewelry. Why I'm saying this is because if you invest 10,000 rupees in buying a ring or a pendant or something, you are paying additional 5-10% of making charges, which are not considered in the price movement of the gold. So, for example, if you are paying 10,000, you are getting a gold worth 8,500 or 9,000 only. So you will need a heavy increment in the gold price to break even and then to earn income. Historically, gold has given sufficient returns. Okay. However, I would not prefer you to invest into physical gold. Why I'm saying this is because the RBI bonds, which RBI has issues every 6 months, if you invest in those are also tracking. If your sole purpose is keeping gold, buying gold for investment, you can go for those bonds. Why? One is because you don't have to take a headache of keeping that gold safe in your house or any locker.
Yes.
Second thing is, for 8 years, that the SGB, the sovereign gold bond, has a lock-in of 8 years. Okay. Every year, biannually, you get a 2.5% taxable interest income on the investment amount. So, for example, if you invest 10,000 rupees in the sovereign gold bond, you would get 250 rupees as in the interest income every year. Ideally, it's a taxable income basis your tax slabs. अगर आप tax slab में नहीं हो तो आपको interest उस पर भी tax नहीं लगेगा. Now, the third additional benefit of this is you are able to sell these sovereign gold bonds into open market. Like if you have a demat account, you can list you basically purchase these gold bonds into your demat account, and you can sell these off after 2 or 3 years. If you feel that in 2 or 3 years you have met your goal of 10-12% appreciation in your gold bond. So मैंने 10,000 में लिया था, now it has reached 15,000 in 3 years. I can sell it off. The only con in this is if you sell before 8 years, the gain which you have made will be taxable. But if you hold it off for 8 years, the gains are tax free.
Okay.
And more or less what we have seen generally is that there is a good amount of return in terms of gold price. Reason being, gold is a precious metal with very limited supply, and it is expected to go up only, but it has its own periodicity. That it may not show you appreciation over 3 or 4 years, but suddenly after 4 or 5 years, it may show you a rate of return of 8 to 10%. It may, but there is no surety that there would be a return because it's a metal. And if tomorrow any of the country announces that they have found a huge pile of gold or huge mine of gold, then suddenly the supply of the particular precious metal would go up in the market, the price would go down. So it's a risky investment.
Okay, thank you, sir. Thank you.
Okay.
Thank you.
We have Preetham. Preetham, please unmute yourself.
Hi, thank you. Thank you, Ketan. Great session.
Yeah, Pritam.
So two-part question. First, if I want to invest a large lump sum and I'm ready to take some risk, what kind of an investment would you suggest? Because most of the risky investments, we were talking about SIPs, more than a lump sum investment. Second one is to the greater community here, that what is a good accessible way to track the portfolio, any apps or websites? Thanks.
Sure. Preetham, before I answer this, I would like to know what kind of time horizon we are looking at or the investment period we are looking at for this.
Pretty long term only, at least 10 years.
Okay. So I would say if there is no end goal in mind. Say, let's take an example which I don't know. Suggest is out of that 1 CR, put 50% to 60% into equity mutual funds, possibly large cap and mid cap. Okay. Let's put we put 60% into equity mutual fund, large cap or mid cap. Rest of 60%, I would say that of that 60%, put 10 to 15% into small cap mutual fund, which has a tendency of giving better returns in long time horizon. What this also does is the large cap mutual funds and the index funds gave me 12% return over a period of time, 12 to 13% safe bet. And these small cap returns have shown 15 or 18% of return over long period. However, with high amount of risk, now what we can do is, now that we have already invested 70 to 80% of our investments, rest of the 20% investment can be done either into precious metals, okay, to take the risk, not the entire 20%, but that 20% can be taken into 10%, 5 to 10% into precious metals, as well as the 5 to 10%, the remaining 10% should go into a safe investments like debt liquid funds. This is particularly from why I'm saying this is because I would map out this entire piece as balance of investment, balance of risk. That my mutual fund investment goes up to 70%, 60 to 70%, and the safer bets, which are highly liquid funds, where if going forward, if I need to liquidate certain assets in next 10 years for any of my needs, I don't have to touch the 70% of my portfolio, which is growing exponentially. I can easily liquidate gold or the precious metal which I have bought, or the debt funds which I am looking at 6 to 8% returns. Sorry, the second question was, Pritham?
About an accessible way to track my portfolio.
Yeah. I'll give you my personal example. Okay. What I do is I have a couple of apps in my phone. Okay. Obviously, these be very sure that these apps do collect your data. They have your data to provide you certain offers or certain recommendation and all. So you need to be very sure that your data would lie with them, and you need to accept that fact. But what I personally do is I use a couple of apps. One is the expense tracker, okay, which basically what this expense tracker does is it reads all my SMSs. What I have personally done is I have enabled all the debit transaction के लिए SMSs. I receive SMS for each and every transaction which I do via UPI or credit card, or if I deposit any check in the bank, I get an SMS for all the debits as well as all the credits for my salaries, interest, dividends, and everything. What this expense tracker does is it reads my SMSs and identifies all the incomes and expenses for that month and gives me a chart, so that I don't have to do any heavy lifting. I just go to my application, I look at the categories, it gives me category level charts, which tells me key where am I spending the most and in which all categories have I spent. The second app which I use is called IndMoney, IndMoney, IndMoney. This IndMoney basically is a fintech which has created, it also has its tie-ups with certain banks and NBFCs, which gives you a bank account as well. However, what I do is I personally only use it to track my portfolio. I have linked all my, so there is I won't deep dive into this concept, but there is a concept called account aggregator. Recently, government has came up with one particular platform which helps all these banks and NBFCs talk to each other, so that whenever I want to apply for certain insurance product or any loan product, I need not I don't have to wait for a long. I just have to connect with these account aggregators, and if the user permits, this entire ecosystem is the end user consent driven. If I give the consent, then my XYZ bank can connect with the other bank and take the necessary information. What this IndMoney app does is it collates all my accounts into one app view. So that for example, if I have HDFC, ICICI, Kotak, SBI accounts, what it does is it shows me all these accounts, all the number of accounts, XYZ accounts. So if I have multiple accounts in HDFC and one each in others, it will show me all the accounts with their balances, with all the FDs. It will also help me pull all my Demat account holdings. It will also help me pull my EPF investments, and it will show me the entire portfolio. It also has capability to understand. So it has a feature which asks you, what are your end goals? So for example, I want to purchase a car in next 5 years, and the car would be somewhere around 5 to 10 lakhs. Say 8 lakh car I want to purchase in 5 years. What I do is I go and punch in all these goals, that I want a car in 5 years for 8 lakhs. I want to plan a trip to XYZ location with 1 lakh rupees. I want my education. I have an child's education need of 2 lakh rupees in 10 years. I want to go for a PhD with 25 lakh rupees abroad in 15 years. What it does is it reads all these goals and prepares a plan for me, which tells me that what should be my portfolio in terms of time period and where am I standing as of now. If I simplify it, it basically shows me a chart. If you can visualize it, it basically shows me a time period ka chart where it tells me that at the end, if I want, say in 5 years, if I want 5 lakh in my account, and right now, if I only have 1 lakh rupees, and from last 3-4 years, my growth percentage has been XYZ, will I meet my expenses? If my salary is say 5,000 rupees or 50,000 rupees, if my dividend income every month is say 10,000 rupees and cumulative income is 60,000 rupees, will I be able to meet my goals at that particular time period in upcoming future? It shows me the chart so that what I can do is I can go back and rebalance my investments. I can make it more aggressive. I can make it less aggressive to defend or grow exponentially. So these two apps I use.
One sec. I think there is an additional dimension to Preetham's question, which is we people who are visually impaired, we use the phone using a screen reading software. For example, when you are if you're working on an iPhone, you use something called VoiceOver, which enables you to navigate on the screen and know what is going on. Likewise, if you are using an Android phone, there's something called TalkBack, which is also a screen reader, which kind of helps you navigate on the screen and know what is on the screen. So the data that is shown on the two apps that you talked about, I think Preetham and all of us will also like to know whether it is readable and can you efficiently navigate through these apps using the screen reader? No, I believe you might not necessarily have a direct answer for this right now, but this is something which you might want to check out. And
let me come back on this.
That's one. And number two is somebody, when I was talking about this talk today, he was asking me whether the CIBIL score, the platforms that you use, are they accessible to the screen reader? Now, that's something which you might want to take back to your company.
Yeah, let me check and confirm back on this.
Yeah.
On these both questions.
Yeah. Okay.
Very valid point.
Yeah, we also have a message. Somebody, Najrul has written, he's asking if I'm getting dividend which is below 1 lakh and TDS is levied on that, how to get that deduction back through income tax return?
But the question needs to be elaborated further because we need to understand whether the end user who has received the interest income less than 1 lakh, is it tax? Okay. If it is less than 1 lakh, ideally I understand that in ITR there is a time period of 24 months in which you can file a revised ITR if you have already filed ITR. Because this is a recent amendment, I think it was done last year itself, that all the dividends were made taxable in last couple of years, where all the dividends which are received are made taxable. However, the upper limit for long-term capital gains and the dividends was given as 10,000. What we can do is we can simply, if the ITR is already filed, then we can basically file a revised ITR. I personally do not have the exact authority on how the revised ITR would file. I would recommend a CA or some competent authority to help on this. But what I understand is if there is a TDS which is deducted on any of the instrument, not only on dividend, if TDS is if I do not file Form 15G or 15H as well, or if say my employer is deducting tax, assuming that my tax and I am not able to provide the proofs in time, then also I would be able to perform the calculation when I'm doing the ITR filing. At that time, when the ITRs are actually filed, there we need to declare all the incomes, and basis those incomes, the final ITR calculation would be done, where your tax would liability would be identified, whether it's a positive liability or a negative liability. And basis that liability itself, you would get the refunds. However, I would suggest in the query to be once validated with a CA.
Yeah, I would think that when you look at the interest earnings or dividend earnings, even if it is less than 1 lakh, I think another parameter that would be used to finalize your taxable income would be your overall income, right? Meaning all the incomes would be added, and then if you're still under the slab, then you'll get a refund.
Correct. In interest income as well, there is a 50,000 standard. So there is a standard deduction of 50,000, as well as overall 10,000 deduction on your savings bank account interest. Once those two are deducted from your income, and your the entire income is clubbed. Now, obviously, there is a segregation of short-term capital gains, long-term capital gains, the dividend incomes. But besides these, so why I'm saying this is because the question talks specifically about dividend incomes, and dividend incomes are like, what I understand is if it is less than 5,000, generally the organization do not deduct TDS if the dividend income which is paid out is less than 5,000. Because what I understand is if your dividend income is more than 5,000 for an annual year, and your plan is not submitted, then they start deducting the income, the TDS on the dividend paid out at the time of payout itself.
Yeah.
So get it checked. Normally, if it is deducted, you should get a TDS certificate along with the payout as well, or it would reflect in your Form 16, which is available in the portals. That the Form 26 says that these particular investments have been paid out, and these all interest the taxes have been deducted. But I think it is possible to once you calculate the entire income for that year, no, under every section, if you put all these incomes under each and every head, you would come to the entire liability of that particular year, basis your normal income as well as the short-term and long-term capital gains.
Okay.
To add more point to it, if your tax overall income is less than 5 lakhs, you will refund if you are submitting the ITR. If the overall taxable income is more than 5 lakhs, then how much you have paid and the calculated value, the difference we can get it as refunded.
Correct.
And for fixed deposits and all, for savings account, ETP on section itself, you can get an exemption up to 10,000 as an interest income.
Correct.
For dividend, each and every penny will be calculated as a taxable income.
Correct.
So can you throw some light on gold ETF on the section? Is it like a mutual fund, or how will we get calculated?
Sorry?
ETF, gold ETF in the mutual fund section itself, gold ETF like that. Some section is gold.
ETF. What I understand. I'm not exactly sure.
Because we don't know much about the thing. That's the thing. That is, if you told that digital gold, physical gold. Is it ETF is also similar to that, or it will be some other different topic?
ETF is almost equivalent to what SGBs are. So the only thing is ETF has an expense ratio added to it. So SGBs, the government provided bonds, do not have any kind of exposures. What I mean to say is that it will differ in terms of returns what we are getting. Okay. Ideally, if my price of physical gold is appreciating by 10%, okay, the sovereign gold bond will give me 10% ka return.
Yes,
Okay. However, when I invest the same amount into ETF will take out a certain percentage of that entire amount, that 10%, as a expense ratio. So it might be very minuscule, like 0.25% or 0.5%. However, the returns which I receive against these are not exactly equal. The second difference in ETF versus sovereign gold bond is, if you hold sovereign gold bond for 8 years, it would be tax free. However, if you hold the ETFs for 8 years, the capital gain which you make will be taxed at LTCG ka tax rate. So ETF basically becomes a kind of mutual fund for you. I would suggest that if you want to go for a mutual fund only, try to go for sovereign gold bond if you don't have any needs to sell that gold before 8 years. If you want to sell it off, I would suggest then go for ETFs, because ultimately, if you sell gold or the ETFs, it will be taxed. So if you don't want the burden of maintaining the security, maintaining and securing the gold in home or in locker, it would be easy for you to maintain it in ETF in a electronic form. Otherwise, you can purchase. The last option would be to purchase gold in today's day.
Okay.
हेलो
Thank you
सर,
for that,
आकाश
Ketan.
यार, मुझे एक सवाल पूछना था. इज इट ओके इफ आई आस्क इन हिंदी?
Yeah, Akash, please पूछिए.
सर एक्चुअली दो सवाल थे मेरा. पहला सवाल था कि जो हम इंडिया में स्टॉक्स खरीदते हैं, तो बेसिकली हमारे पास जो दो डिपॉजिटरी पार्टिसिपेंट्स है, सीडीएसएल और एनएसडीएल. तो आपने जो आईएनडी मनी बताया, उसके थ्रू हम यूएस के स्टॉक्स में भी इन्वेस्ट कर सकते हैं. तो उसके यूएस के स्टॉक्स के लिए कौन सा डिपॉजिटरी पार्टिसिपेंट है? और दूसरा सवाल ये था, मैं पूछ लेता हूँ क्विकली टू. दूसरा सवाल ये था कि डाइवर्सिफिकेशन बहुत जरूरी है म्यूचुअल फंड में भी और स्टॉक्स में भी. तो म्यूचुअल फंड के केस में मतलब कितना म्यूचुअल फंड हम ले तो ओवर डाइवर्सिफिकेशन भी ना हो और वेल डाइवर्सिफाइड भी हो, ताकि रिस्क मैनेज हो. और स्टॉक्स के केस में कैसा है? क्योंकि कभी कभी क्या हो जाता है, ओवर डाइवर्सिफिकेशन के केस में हम अपना रिटर्न कम करवा लेते हैं, और अगर कम डाइवर्सिफाई करते हैं तो रिस्क बढ़ जाता है. तो कौन सा नंबर ठीक है म्यूचुअल फंड और स्टॉक्स के मामले में?
करेक्ट. सो क्विकली मैं दोनों फर्स्ट क्वेश्चन के लिए व्हाट आई अंडरस्टैंड इज कि ये जो सारे डिफरेंट एप्स है, आई थिंक एचडीएफसी का भी एक ऐप, मुझे एग्जैक्टली नाम याद नहीं है, बट ऑल दीज इन्वेस्टमेंट जो भी इन्वेस्टमेंट्स आज हो रही है, एंड मनी के थ्रू कीजिए या फिर अदर एप्स के थ्रू कीजिए, जो हम फॉरेन स्टॉक्स में इन्वेस्ट कर रहे हैं, दैट इज हेल्ड इनटू वन पर्टिकुलर फॉरेन पार्टी जो डिपॉजिटरी है, विच गवर्न्स के आपके स्टॉक्स जो है वो उनके पास डिपॉजिट होते हैं, नॉट इनटू दी एंड मनी का ऐप में नहीं होते, ना कि वहां के किसी पार्टी के पास होते हैं. आपके फंड्स फॉरेन डिपॉजिटरी के पास जाते हैं, एंड आई थिंक देयर इज सम लिमिट ऑफ 5 लाख और समथिंग जितना आप टैक्स फ्री कर सकते हो. टैक्स फ्री इन द सेंस इन्वेस्टमेंट टैक्स फ्री कर सकते हो. अगर आप उसके ऊपर फॉरेन इक्विटी में इन्वेस्ट करते हो, यू विल हैव टू पे सर्टेन अमाउंट के टैक्स या ऐसा कुछ है. देयर आर सर्टेन नॉर्म्स व्हिच आप अगर एक सर्टेन अमाउंट के ऊपर आप अगर फॉरेन इन्वेस्टमेंट करते हो, 1 लाख और 250 लाख डॉलर्स के ऊपर आप करते हो, ऐसा कुछ एक उनका नॉर्म्स है, जिसमें आपको एडिशनल टैक्स भी पे करना पड़ सकता है, अलॉन्ग विद अदर डिक्लेरेशंस, फाटका डिक्लेरेशंस वगैरह करने पड़ेंगे. आप इतना सारा फॉरेन करेंसी में क्यों इन्वेस्ट कर रहे हो? बिकॉज जनरली गवर्नमेंट का फोकस ये है कि बाहर से पैसा अंदर आए रादर देन बाहर जाए. सो दैट्स व्हाई दीज लॉज आर देयर. Second question about diversification, I would say it's up to one person's choice. Okay, but if you say कितना डाइवर्सिफाई करना चाहिए इन टर्म्स ऑफ म्यूचुअल फंड्स और इक्विटी, आई वुड से देखिए इक्विटी में आपके ऊपर इक्विटीज में आपके ऊपर डिपेंड करता है कि आप कितने इक्विटी परचेस करना चाहते हो. व्हाई आई एम सेइंग दिस इज बिकॉज देयर माइट बी अ पर्सन जिसके पास बहुत सारा पैसा है. हाउएवर देयर इज अ सेइंग कि one should not put all the eggs in one basket. ओके मतलब आज मैंने देखा कि शायद रिलायंस का स्टॉक बहुत अच्छा चल रहा है, तो मेरे पास 1 करोड़ रुपए, मैंने 1 करोड़ रिलायंस पर डाल दिए. ठीक है, या फिर रिलायंस के सब्सिडीज में 25-25 लाख करके डाल दिए. बट इट माइट हैपन कि रिलायंस एज अ होल शायद नीचे चले जाए या ऊपर चले जाए. आई डोंट हैव अ से. तो व्हाई दिस डाइवर्सिफिकेशन इज डन इज टू सेफगार्ड आवर मनी, कि अगर एक कंपनी नीचे जा रही है तो दूसरी कंपनी ऊपर चली जाए. अब इसके लिए आप कितने स्टॉक्स खरीदना बेटर है, इसका कोई कैलकुलेशन नहीं है. बट नॉर्मली ये कहा जाता है कि अगर आप डाइवर्सिफाई कर रहे हो तो डिफरेंट सेक्टर्स में इन्वेस्ट करो. एक सेक्टर में 1-2 कंपनीज में इन्वेस्ट करो, सिर्फ एक कंपनी में ना करो. पॉसिबली आप 1-2 टॉप, अगर आप सेफ खेलना चाहते हो एक इक्विटी में, तो आप किसी भी से आईटी सेक्टर से कोई टॉप की 2-3 कंपनीज में इन्वेस्ट कर दो. आप फार्मा में 2-3 कंपनीज में इन्वेस्ट कर दो. आप इंडस्ट्रियल इक्विपमेंट्स में आप 2-3 कंपनीज में इन्वेस्ट कर दो. आईटी में कर दो. सो दैट व्हाई वी आर सेइंग दिस इज बिकॉज ये सारी जो टॉप की कंपनीज हैं, देयर इज अ पीरियोडिसिटी. आप अगर इन जनरल आप इक्विटी मार्केट देखोगे तो एल्यूमिनियम सेक्टर या इंडस्ट्रियल सेक्टर का एक पीरियोडिसिटी होता है कि वो 1-2 साल के लिए बहुत अच्छे रिटर्न देते हैं एंड देन अगले 4 या 5 साल के लिए स्टैग्नेंट बन जाते हैं. सेम होता है आपका फार्मा का. करेक्ट. आप अगर फार्मा में जाओगे, फार्मा में भी अब वैसे ही है. अगर यूएस एफडीए का कोई रेगुलेशन आता है तो हमारे पास वो स्टॉक्स भागना चालू हो जाते हैं या फिर वो स्टॉक गिर जाते हैं. सो दैट इज हाउ इट इज. बट ये हम क्यों डाइवर्सिफाई कर रहे हैं इज बिकॉज कि अगर मेरा एक सेक्टर नीचे पुल हो रहा है तो मुझे आईटी सेक्टर ऊपर उठा ले और मेरा ओवरऑल पोर्टफोलियो पे बहुत ज्यादा इम्पैक्ट ना हो. When what will happen in this case is आप अगर 10 लाख रुपए इन्वेस्ट कर रहे हैं, जनरली आप अगर ये देखोगे ना, आप जो भी बड़े पोर्टफोलियोज, जिनके भी बड़े पोर्टफोलियोज देखोगे, 10 में से अगर उन्होंने 10 कंपनीज में इन्वेस्ट किया है, उसमें से आइडियली 2 या 3, मैक्स टू मैक्स 4 कंपनीज उनको बहुत अच्छा रिटर्न देती है. 25-30%, 40% रिटर्न देती है और पॉसिबली बाकी नेगेटिव होते हैं.
Yep. Could you, Ketan, just summarize what you just said in 2-3 lines? And yeah, could you just summarize what you just said to Akash just now in maybe 2-3 sentences? Because there have been a couple of people who have requested whether it could be said in English. So maybe you could just summarize what you said just now.
Sure. Just give me 1 second. Huh?
Yeah, and then maybe we will close after that because I think it's coming. It's already 6:30, so so you can just summarize and then I'd like to we'll close.
Sure. A quick summary of what I just mentioned is basically what diversification is, why diversification is done. There is no hard and fast rule of any kind of diversification. The only understanding which is there is that one should not put all the eggs in one basket. When we are investing in equity market or the mutual funds, one should have a strategy of appropriate allocation in various segments. Why we say this is because there are cyclical nature of various investments such as aluminium or the industrial or precious metals, where for a couple of years it gives very good returns and then they become stagnant for next 4-5 years, and in every 7 years you will see the same pattern repeating. Say similarly, there are certain segments like pharma which are heavily dependent on US FDA rules. So what we can do is we can appropriate our investments in such a way that it's invested in multiple small sectors such as IT, pharma, industries like Reliance or L&T, TMARS, the consumer goods, so that whenever one sector is pulling us down, the pulling entire portfolio down, the other sector would help us be stabilized or will pull the entire gain up. In general, if you see any big portfolio, there would be 10 or 15, 20 investments done. However, out of those 10, 20 investments, there are hardly 3-4 investments which give you phenomenal returns, which would pull the entire portfolio up. It's basically based on the 80-20 Pareto principle, that the 80% of your gains are done by the 20% of your portfolio. If you can apply this 80-20 wala rule in all aspects of your life, that 20%, the 20%, even if you see in the work-life balance, work-life or anywhere, the 20% work, which is highly impactable, which is having high impact on your life, will take your 80% of your time. And rest 80% work will be done quickly in 20%. That's the summary of it. That you should invest with a strict discipline. The second principle which you should understand is when to grow your income, at what point of time, and when should you defend your income. Third thing is think about creating alternate income sources so that you would have multiple sources to live with once your regular income stops. And I think I would rest here. Yes, sir.
Yeah. So, Ketan, I'd like to formally thank you for investing time to kind of come and talk to us. The pleasure and the privilege, and it was very educative. We thank you for that. And I'd like to thank all the participants.